Hello, everyone, and welcome back to the channel. I am your NEMT startup coach, Willena. If you're new here, hit the subscribe button so you don't miss valuable content that can accelerate your journey in the NEMT industry. Today, we're diving deep into a topic that can make or break your venture. Yes, we're discussing financial planning. But remember, we're not just scratching the surface. This is about building a robust financial blueprint that paves the road to your NEMT business's success. We're going to break it down step by step, starting with setting clear financial objectives, both short-term and long-term. We'll discuss operational costs, revenue projections, and even how to navigate the complex maze of securing funding. Along the way, we'll touch on market analysis and risk assessment to ensure you're profitable, but also sustainable and resilient. And if any of this feels overwhelming, remember, you don't have to go it alone. We offer expert coaching and mentoring plans specifically tailored for NEMT entrepreneurs. Our mentoring plans are designed to help you clear common pitfalls and guide you to success much faster. Remember that you can always return to this video, and to make your life even easier, remember to check out our business plan template on my website at www.nemtstartup.net. It is designed to help draft a financial projection for your NEMT business. All right, let's jump into it. We'll start by focusing on setting clear financial objectives. Objectives are defined as the financial targets you aim to hit within a specific time frame. You'll want to have both short-term and long-term goals. Short-term goals are usually for the first year or two, and long-term objectives span a longer period, usually 3 to 5 years. These targets include reaching $1 million in annual revenue or capturing a 15% market share in your local area. Next, let's talk about operational costs. Operational costs are the ongoing expenses you'll need to keep your NEMT business running smoothly. First on the list are fuel and maintenance for your van. For just one van, you might look at approximately $8,000 to $10,000 per year. Next is personnel. If you plan on hiring, budget around $40,000 annually per driver. Insurance will be another significant cost, potentially around $15,000 yearly for a single van operation. After this video, I strongly recommend you create a detailed operational budget. This exercise will help you manage costs effectively and set achievable financial goals. So take a moment today to jot down your financial objectives and start laying the financial foundation of your NEMT business. If you don't know where to start, I have a budget template located on the website to assist you. All right, everyone. Now that we've discussed startup and operational costs, let's switch gears and talk about the fun stuff. Revenue projections. Let's estimate the potential earnings for your NEMT business. Revenue projections are based on two primary factors: your pricing model and the number of trips you expect to make. For instance, let's say you plan to charge $2 per mile with a $20 minimum fare. If you anticipate making around 15 trips per day with your single ADA compliant van, you can use these numbers to estimate your daily, monthly, and annual revenue. So, 15 trips at a minimum of $20 each would already guarantee you $300 per day. The real revenue will depend on the distance traveled, so your earnings might be higher. But based on this conservative estimate, you can make around $9,000 a month, which translates to $108,000 a year. Number 3, consult publicly available data. Some services might have rates listed on third-party websites or in online reviews. Check sites like Yelp or specialized transportation forums where past clients may mention cost. Number 4 is check social media and promotions. Companies often share promotional rates or special packages on social media, giving you an insight into their pricing strategy. Number 5, talk to clients. Sometimes the best source is the customer. Speak with these people who have used these services to understand what they pay. Now remember, these are just projections. Your real income may vary due to seasonality, competition, and market demand. However, having a clear revenue projection helps you set achievable goals and plan your growth strategy. Now, let's talk about something that goes hand in hand with revenue projections: market analysis. Knowing your market inside and out is not just important, it is essential. First, ask yourself, who are my clients? In the NEMT industry, your clients could range from older adults to state and local contacts looking for reliable transport for their patients. Next, let's get into the nitty-gritty. Analyzing your competition. Competitor analysis can be tricky, as many NEMT services hesitate to disclose their rates. But here are 5 essential tips for collecting this information. Number 1 is mystery shopping. This is my least favorite and least reliable, but it is worth a shot. I suggest posing as a potential client and inquiring about services and rates. Companies may be more willing to disclose this information to a potential customer. Number 2, network with industry insiders. Step out of your comfort zone and safely approach drivers who you may see at local gas stations and facilities. You can also attend industry events or join NEMT online forums like my Facebook group. Sometimes professionals in the field are more willing to share information within a network, including parents and family members. Understanding your competition is invaluable for carving out your unique selling proposition, or USP. Your USP could be better customer service, newer vehicles, or specialized services like long distance or urgent transport. Knowing your target market and competition will guide your marketing strategies, pricing, and services. With this information, you'll meet market demands and differentiate yourself, giving you a distinct edge in the marketplace. So, if you haven't already, take time to study your market and your competitors. This time will allow you to understand your business landscape better and refine your financial planning and project revenue. Second, stay informed. Follow news on fuel prices and industry changes. Forewarned is forearmed. Lastly, consider insurance options that cover various risks, from vehicle breakdowns to business interruptions. Think of risk mitigation as your plan B, C, and even D. It's not about avoiding risk, but managing them effectively. Let's move on to a topic that most people don't want to think about, but absolutely must: risk assessment. I want you all to remember that things can and likely will go wrong. It is not about being pessimistic, it's about being prepared. Potential risks could include sudden hikes in fuel prices, unexpected maintenance, accidents, and even changes in regulations or healthcare laws that may affect your services. So, how do you mitigate these risks? First, always keep an emergency fund to cover at least 3 to 6 months of operational cost. This fund acts as your financial cushion. Step 2 is a reality check. Investors and banks will scrutinize your financial projections. If your numbers look inflated or unsupported, your credibility takes a hit. It is better to be conservative and realistic in your estimates. Step 3. Include realistic financial projections. Show best case scenario, likely, and worst case scenarios, but keep your figures conservative. Overestimating earnings or underestimating costs will send red flags. A hot tip: Prepare to answer questions about your break-even point and contingency plans. Both banks and investors will want to know your plans if things don't go as expected. This preparation not only shows that you have an understanding of your numbers, but also that you're aware of the risk involved. Step 4 is approaching potential funders. But when you do, remember, you're not just asking for money, but you're entering into a partnership. Be prepared to discuss not just your business, but also the industry trends, challenges, and opportunities. Show that you've done your homework. To wrap up, securing funding is not just a financial exercise, but a strategic one. Be realistic in your expectations and preparations, and you'll find a funding solution that fits your needs and business chart. Okay, let's get real for a moment. Securing funding is often one of the most challenging aspects of starting a business, especially in specialized fields like NEMT. So, what exactly are banks and investors looking for? Let's dive in. Firstly, banks and traditional lenders are generally risk averse. They seek a good credit score, collateral, and a solid business plan. If you have experience in the NEMT or healthcare industry, that's a definite plus. Your business plans should not only be thorough, but also realistic. Now, investors, particularly angel investors or venture capitalists, are slightly different. They are willing to take more risk, but expect higher returns. They'll be interested in your team, unique selling proposition, and growth potential. Sometimes they might even want an equity stake in your business. All right, we're coming to the home stretch here. Preparing your financial statements is one of the final but crucial steps in your financial planning. These aren't just documents, they're vital tools that help you and potentially your investors understand the financial health of your NEMT business. First, you'll need an income statement, also known as a profit and loss statement. A profit and loss statement shows your revenues, costs, and expenses over a specific period, usually a month or a year. Next is the cash flow forecast, which outlines when and where your money is coming and going. It helps you plan for lean times and identify surpluses. Finally, the balance sheet. The balance sheet gives you a snapshot of your assets, liabilities, and equity at a specific time. It helps you understand the net worth of your business. These statements are essential not just for internal planning, but also for securing funding and selling your business down the line. Wow, we've covered a lot today, haven't we? Let's quickly recap before we go. We started with understanding your financial objectives, both short-term and long-term. Then we discussed the crucial startup costs, focusing on just one ADA-compliant wheelchair van. We explored the nitty-gritty of operational costs and how to manage them. After that, we looked at revenue projections and market analysis to help you understand how much you could earn and who your competitors are. Risk assessment came next, where we emphasize the importance of having a plan B. Then, in our funding requirements segment, we got realistic about what banks and investors are looking for and how to approach them, especially when you're just starting and don't have financial history. These statements are essential not just for internal planning, but also for securing funding and selling your business down the line. We wrapped up with a deep dive into the key financial statements you need to prepare and how to handle questions about your lack of financial history from funding agencies. All of this information is a lot to take in, and embarking on an NEMT startup journey can feel overwhelming. Consider our coaching or mentoring plans if you're serious about building a successful NEMT business. You don't have to go it alone. Expert guidance is available to help you avoid common pitfalls and succeed. Remember, in today's economy, slow and steady wins the race. Visit me at www.nemtstartup.net today to explore how you can receive expert guidance during your NEMT startup process. If you found this video helpful, do me a favor, like it, share it, and subscribe to our channel for more invaluable insights into the NEMT industry. Thank you all for tuning in, and I look forward to seeing you all excel in your NEMT business journey. Be blessed.